Hi there, unsure whether a construction worker is self-employed or an employee? Let's explain HMRC's key status tests and why they matter.
Picture an active UK construction site. You have 20 subcontractors engaged for the project, and the main contractor is confidently deducting the standard 20% withholding rate under the construction industry scheme. The internal logic is straightforward. The firm verified every worker through the CIS portal, made the correct deductions, and routed the money to HMR Revenue and Customs. In the contractor's mind, they are completely shielded from employment tax liabilities. This diagram illustrates exactly what happens when an HMRC audit occurs 12 months later. The inspector bypasses the portal verification and reclassifies the entire site as employees under PAYE. The immediate financial consequence is severe. The contractor receives a backdated Regulation 13 tax determination, resulting in a six-figure liability that instantly threatens the firm's balance sheet. I see this exact scenario play out constantly. I am an expert tax advisor at Atlas Tax Advisors, specializing in UK construction compliance, and this specific misunderstanding is the primary threat to construction firms today. Paying a worker through the construction industry scheme is merely a mechanism for tax withholding. It is not a legal determinant of self-employment. Relying on a CIS registration as a shield against employment law exposes your business to massive, unquantified risk. For a modern UK construction firm, it is the fastest route to insolvency. The UK construction sector relies heavily on a fluid workforce of genuinely self-employed, independent tradespeople. The compliance issue arises with false self-employment. This occurs when a worker is given the label of an independent contractor to avoid paying employer national insurance contributions, but the day-to-day reality of their site management perfectly mirrors traditional employment. Many directors and their accountants operate blind to this distinction until the day an HMRC inspector arrives. They operate under the false belief that holding a CIS card provides absolute legal protection. This special commissioner's ruling proves tribunals routinely ignore CIS deductions, looking exclusively at the factual working relationship. The commissioner noted that flexible terms, like ceasing work without notice or being paid purely for hours worked, do not automatically save a firm from an employment ruling. The cost of failing this test includes an additional 13.8% in employers' national insurance contributions, backdated income tax, and crippling compliance penalties assessed directly against the engager. The label you type on a contract means nothing to HMRC. The only thing that protects a firm's balance sheet is the factual, demonstrable reality of how that worker is managed on site. This model illustrates the two distinct frameworks HMRC uses to assess status. We will start with Pathway A, direct engagements. These are evaluated under the 1968 Ready Mixed Concrete Common Law Test. The first pillar of this test is substitution. A genuine subcontractor must have the contractual right and shoulder the actual financial burden to send a replacement operative if they are unable to work. The second pillar is control. This examines who decides precisely how the specific tasks are executed on a day-to-day basis. The third pillar is mutuality of obligation. This tests whether the firm is forced to offer ongoing work and whether the worker is forced to accept it once offered. This scale represents HMRC's ESM 0540 guidance regarding the provision of equipment and financial risk. Providing basic hand tools or personal power drills is viewed as neutral. However, investing in major capital assets or quoting fixed prices where the worker absorbs the cost of fixing defects strongly indicates a genuine independent business. If a direct worker cannot provide a substitute, is heavily controlled in their daily tasks, and takes no financial risk, they are an employee in the eyes of the law, regardless of their CIS registration. Inserting an agency or an umbrella company into the supply chain completely changes the legal rules. This is Pathway B. This chart shows the impact of Section 44 of the Income Tax Act. Introducing a third-party intermediary activates a much stricter standard known as the supervision, direction, or control test. Supervision means someone is actively overseeing the worker to ensure the job is completed to a specific standard. Direction involves providing active instructions or coordinating exactly how the work progresses throughout the day. Control means dictating what tasks are undertaken, including holding the power to move the worker between different jobs on the site. Under Section 44, if anyone on the site has merely the contractual right to exercise supervision, direction, or control, even if they never actually use that right, the worker is legally caught by PAYE. On highly managed sites, site managers inherently exercise this control over tradespeople to ensure health, safety, and precise project alignment. Because of this strict test, the vast majority of agency-supplied tradespeople legally belong on PAYE. Using CIS for intermediary labor creates massive financial exposure. The consequences for getting employment status wrong have escalated drastically for the 2026-27 tax year. This diagram outlines the new threats introduced by the Finance Bill 2025-26. HMRC now possesses expanded anti-fraud powers to push unpaid tax liabilities up the supply chain. Under the Kittle measures, if your labor agency fails to pay its PAYE obligations, HMRC can legally hold you, the main contractor, financially liable for the shortfall. Simultaneously, the Home Office has extended full right-to-work checks to cover self-employed operatives. Non-compliance carries a penalty of £60,000 per illegal worker. An investigation into either of these areas automatically triggers an audit in the other, creating a compounded compliance threat that can dismantle a firm. Claiming ignorance of your supply chain is no longer a valid legal defense. A failure in labor assurance triggers both tax recovery actions and civil immigration penalties at the same time. To protect your firm, there are practical planning considerations you must implement immediately. First, your written contracts must perfectly mirror the actual reality on the ground. A theoretical right of substitution in a document will not hold up if your site manager physically prevents substitutes from entering the site. Keep clear, contemporaneous records detailing exactly how and why an employment status was determined. During an HMRC audit, this documented reasoning is your primary shield. Every single worker must undergo an individual status assessment. Simply running them through the CIS verification portal is legally insufficient to prove self-employment. This video provides general guidance. Tax legislation is highly fact-dependent and subject to rapid change. You must seek qualified professional advice before making financial decisions regarding your workforce. At Atlas Tax Advisors, we specialize in rigorous compliance audits and supply chain defense strategies. Our experts are ready to help you navigate these regulations. In 2026, securing your business means looking beyond the CIS label and fortifying the actual legal foundation of your workforce.